Dan Greenshields, Facebook is going public very soon. You're CEO of ShareBuilder. Can you get me some shares?
We are not an underwriter in the transaction, but there are the shares will be free to trade the day that it's free to trade, which is usually they wait a couple hours in the morning, and then they release the shares, and you can buy them. We'll take orders as soon as it's priced. We'll allow you to enter a limit order, and then once it's free to trade, you can enter a market order to buy the stock. All
right. Well, we've seen lots of IPOs pop recently, lots of big internet IPOs. Tell me, using ShareBuilder, how would I know whether or not Facebook is a smart IPO to get into?
Actually, at ShareBuilder, we just launched a new IPO center. During the recession, there wasn't a lot of IPOs, so but now that there's actually a lot of companies accessing the capital markets, we thought it was a good time to bring out this product. And you can actually just go to this IPO center, click on it, and it has all the relevant information. Their earnings chart, interactive charting. You can see what they're trending on net income. You can click and view this prospectus. You can read about the risk factors in the company. It's all in one place so that an investor can make an informed decision. How big is the company? You know, is this company have 100 million in revenues, or like in Facebook's case, it's over $1 billion in revenue, and it's got close to 1 billion customers worldwide.
Well, it's hard to know about the risks with IPOs because there's no trading history. So tell me, what should people be looking for when it comes to an IPO?
Well, first, IPOs, they're the grassroots of capitalism. So this is, there's probably nothing more American than an initial public offering, and especially companies that, all IPOs are speculative because you don't have that track record. So an investor should be careful, make sure they don't put all their money into one issue. We see people make that mistake. Buying IPOs is fine as long as you keep it constrained to the right amount in your portfolio. Like any stock, you want to be diversified. You don't want to put all your eggs in one basket. You should look, if you're a customer of the company, you understand the product. If you go to our ShareBuilder's IPO Center, you can see what their revenues are. You can see what products they offer, how much money they make, whether they're growing or not growing. You know, there's ratios, PE ratio, price to sales ratio is another really good one to look at. And whether the company's growing and how much you're paying for that growth.
Do you think it kind of gets overblown where people really want the pop and they forget that, look, once it starts trading, you can get it, and it'll be trading, forever after that, as long as the company stays in business. And people just get a little bit too crazy around that first day pop.
Yeah, I mean that's a institutional kind of fund manager thing, right? They all want to get in the deal, and then it pops, and that helps make their return numbers.
And helps reward their best customers.
That's right. I mean, Warren Buffett has a saying that it's like he can wait till he doesn't need real-time quotes. He can wait till the Sunday paper, and he can whether he buys it on Tuesday, Wednesday, it doesn't really matter because you're a long-term investor over a 10-year period. Whether you got in on Monday or whether you bought it on Wednesday, that's not going to be relevant. In Google, for example, it priced at 85. It had that first day pop, traded up to 100, and it's never seen those price points since. And now today, Google trades anywhere from north of $600 a share. And that's a great company. That's a new age technology company. And I think with Facebook, you have again, it's another new age company, right? People say, "Oh, innovation's dead in America." This is a company that's proven that wrong.
And do you think it'll bring more individual investors back into the stock market because volumes have been pretty low?
Volumes have been low, but the great thing about these, what I call kind of bulletin board IPOs, is they're going to get a lot of attention. It's going to focus again on what Wall Street does for the positive. It's a grassroots of capitalism. It allows companies to access, and it's not access a market. They actually raise money, use that money to hire people, to expand their markets, to go international, and to market their products. So it's a pretty important function in our economy, and that's really what public offerings do. They raise capital, and yes, people get liquidity. The venture investors and all the people that were in Facebook have access and then can sell their shares. Other people can buy them. Investor rotation, right? You have one set of investors, now they're broadening it out. They'll have a much bigger set of investors.
This market is
stock tickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to